Wow. Man, the markets are moving great, huh? Thank you, Federal Reserve. Namaste. Life is great, life is grand, life is good, life is beautiful. Oh. Gotta get what you got, gonna get what you give. Yeah, thank you, Fed. So, dollar's weakening on this idea that maybe they're gonna cut interest rates. I didn't actually attend the press conference. I want to read it word for word because I still think that the media is overhyping everything. So I want to go all the way through and read every single word. That's what I would do if I was me. So anyways, we'll put that there. By the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you much for being a client. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So Brooks says he surprised by he basically confirmed 50 basis point cut for July. Okay, well, it's two things. So maybe that's true. Like I said, it wasn't there, and I want to read the transcript. I haven't read the transcript. Okay. July historically is not a live meeting. And so if he cuts interest rates in the middle of July, who the heck is going to adjust to portfolios? Really? But who's gonna do the work? That's a very strange time to do it. I mean, there's no one in the bank. Everyone's on holiday. In the United States, they're either at the end of their holidays or the Europeans are getting ready for their holidays, but right? So I don't know. It seems a little strange. September or October would be normal. And then 50 basis points? Really? That's a lot. Why? So anyways, I want to look at it. That's all. So anyways, hey, this webinar is brought to you by TradersWay.com. Thank you very much. If you're enjoying these webinars, technically, fundamentally, psychologically, all that kind of stuff, if you like to have a community of serious foreign exchange traders in your life, then please thank Traders Way by visiting TradersWay.com and opening an account. Start with the demo. When you're in your back office, download MT4, come back to this video. You can download all my chart templates for free. It's in the description below the video. So in that case, anything else, please leave comments, please like. It's still strange to me that 90% of people watch these videos, but don't leave a comment or even a like. And when you look at the statistics, people watch for a very, 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 very long time, right? But don't have the common courtesy to even leave a like. So come on. If you've been watching for 20 or 30 minutes, leave a like, dude. Come on. Hi, Wayne. How many contact you personally? I'm not sure who or what you're talking about. But anyways, let's get on with it. Okay. Oh, so we talked about this yesterday before the meeting. So we did no technical, right? After subtract. Well, most people do receive the email. Okay. So unless you did it like 9 months ago or something, there was a small glitch for some people, but so anyways, let me go back. Okay, so yesterday I said if the Fed hinted at cutting interest rates, the dollar would weaken. If the Fed hinted at not cutting interest rates, the dollar would get strong. Right? Hey, SL. Okay. Oh, well, check your spam folder, Peter. Okay. Okay, so does everyone confirm that yesterday we said if the Fed hinted at cutting interest rates, the dollar would weaken. If the Fed hinted at not cutting interest rates, the dollar would get strong? If we got that far, because that's basic, I don't know, that's a basic reaction to that type of policy change or not policy change. Just want to make sure we're on that. Okay. All right, sorry, Peter. CV, Joel, yep. Okay, good. I mean, if that was new to you, make sure you write that down because that's important. Now, it's not always the same. Okay, let me preface that. If the entire world had been in a strong, healthy economy, and then there were very obvious signs that the global market was about to come crashing down. Andrew, I'm going to try to do that today. So if the global economy was healthy and there were very obvious signs the whole house of cards was about to fall apart, and the Fed cut interest rates because of it, then the US dollar would get strong. Okay? You understand that? So it's only under these circumstances that the dollar gets weak. Because what we had talked about, I think maybe a week ago, maybe it was Monday, but we talked about in this situation, you have to isolate the United States. It's not a global move. Okay? And in that case, a cut spurs U.S. economy specifically. But also will help, I never mentioned this, but I should probably do it. A U.S. rate cut in this scenario not only will spur the U.S. economy, but should also be good for emerging market currencies. Okay? Now, in a different scenario, where the whole world had been doing well, so let's say 10 years ago, before the financial crisis, and all economies are hot, but suddenly have turned ice cold, and in that situation, the dollar gets strong when the Fed cuts interest rates. A little strange, right? 10 years ago, when the Fed cut interest rates, the dollar became the strongest currency in the world for like 2 years, maybe 3 years, maybe 4 years. Now the Fed's cutting interest rates and the dollar gets weak. Huh. Okay? You see what I mean? So make sure you understand, like if I said, write a 3-page essay of why, comparing and contrasting 2009 with 2019. Why is the same Fed policy of cutting interest rates producing the exact opposite results? You should be able to write that paper. All right, so let's just move on. Okay, take a look at here. USD Swiss franc. We said dollar would weaken if the Fed hinted at cutting interest rates. Down, 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 down. Okay, is it tradable on a 15-minute chart? Well, let's find out. Okay, down, 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 up, sell, down, 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 up, sell. Let's thin this out a little bit. Okay, down, 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 up, sell, 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 down, 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 up, sell. You can sell it here. Okay, down, 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 up, sell, down, 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 up, sell, down, 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 down. How many people have read my book? The one I wrote 12 years ago. Okay. Most of those charts are 15-minute charts. Most of my trading 10, 12 years ago, the actual trading of itself, not the analysis, but trading, was on a 15-minute chart. So in that book, I'll give you a synopsis of the book. I mean, half the book is how to keep a trade journal properly and use it to improve your trading, which most people don't do. Most people don't keep journals, and the ones that do keep journals, they don't do it right. Okay, but as far as technical analysis, this has always been the basis of my trading. I look for a 2155 cross, and I trade in the direction on a 15-minute chart. And I use the 21 as a dynamic level of resistance. So the book says sell, retrace back to the 21, 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 sell. And then to take it even further, the actual trigger is the 5-8 cross down, is the 5-8 cross down, is the 5-8 cross down, and is the 5-8 cross down. And you can see the 5-8 has not crossed back up, so you're still in this trade. So these are spot trades. So this is a sell, this is a take profit. This is a sell, this is a take profit. This is a sell, this is a take profit. And by the take profit, I mean the 5-8 up. And then the 5-8 down is the new sell, but off of the 21. Okay? So it's back to the 21 sell, back to the 21 sell, back to the 21 sell. Okay, all so on and so forth. And now, if you're going to stay that way, you stay short on the 15-minute chart. Now, it takes maybe an hour and a half to get knocked out, so you might have to have some sort of indicator that would tell you in the future, that would help you tell the future of where the 5-8 would cross up. But if you didn't have any sort of indicator that told you the future, you were only using lagging indicators, you would stay short on this pair until this 5-8 crosses up. Now, it just happens we do have an indicator that tells us the future, and that indicator says when it gets to this line, just go ahead and take your profit. Don't worry about it. Because if it hits this and then goes all the way back up, it'll take what? Like I said, hour to an hour and a half to get your 5-8 to cross up, but by then you already gave away 33 pips, maybe 50. So this is a leading indicator and says, yeah, if you get to that price, go ahead and take your money. Now, if there's a psychological level or some other level, like there is a level right here that says you can just go ahead and take your profit. And then there's also 98.5, right, which is a midpoint psych. So really anywhere in here is a fine place to take profit. But if you're going to be stubborn about it and not use leading indicators, you're just going to stay short. Because there's one thing that we could do here. 5-8 bill. 5-8 cross. Okay? To anybody new, let's do this now. To anybody new, I'm going to give you something awesome for free. YouTube.com/FX. Yeah. Okay.
What you're looking at here is the pound dollar. This is live. You're looking at the MT4 charts provided by FXCM. You know, the prices are moving. This is the real deal. This is happening right now. On the left, I have a 15-minute chart. In the middle, I have a 1-minute chart. On the right, I have a 1-hour chart with pivot points. And let's stick to the 15-minute chart right now.
4 videos.
Again, this is the pound dollar.
20.
And what's the first thing
25 minutes each.
I look for? I say to myself,
So basically 2 hours of free videos. That will help you get caught up to the 5/8. Okay. It'll also tell you all the different settings for the indicators and stuff like that. Okay. So just watch the videos, guys. It's about 2 hours. It'll rock your world. It's pretty good. Trust me. Okay. All right. So how many people remember non-farm payrolls? Sup, Pharaoh? And in non-farm payrolls, oh, you know what? I have it somewhere else, don't I? I think I have it. I think we found it in here. I was analyzing it. Where's the dollar? Is it this one? Was it this one? No. Maybe it was Euro USD. Oh wait, that's USD cat. What? Is it this one? No. Is it this one? No. Why was that? Let me go back to. USD CAD. Now I've lost it completely. I must have killed me. Anyways, somewhere in the world of pivots, maybe. Ha ha! There it is. Okay. In non-farm payrolls, which was a week ago. Was it a week ago? Yeah, I guess a week ago. And we were here, and the news shot the euro dollar up. So I wrote counter trend question mark, because we were going, we were in this part of the world. We were like going up and up and up on smaller time frames. And I said counter trend, and I said specifically at that price before it happened, like 12 hours before it happened, right? You guys remember that? And then what is the target if a counter trend does develop? And by the way, it dropped down, it dropped up, it dropped down, it dropped up. Okay. See that 21 working again? But under, like, if you've taken the swing trading course, so where's my swing traders? What does this mean? What is the target of a counter trend? What have you learned in the training course? In this specific situation, like if it happened later in the month, no. I mean, there's lots of little things here. But what do we all know absolutely for sure is the target for the counter trend? Oh, my pleasure, Stephanie. Wayne, how do you stay in a trade for months or years? It's easy. Just don't touch it. Move your stop to break even. What is the target, swing traders, for a counter trend trade? Hello? Yeah, you're going to have to type on a keyboard. How about if you don't know, type in a question mark? I need to know who knows and who doesn't know. I'm your coach. I need to know where the gaps are. Yes. Thank you, swing traders. The target, okay, the target, clear, the target is this. Ha! We talked about that here. As it was going up, that this here would be the counter trend. Look how accurate it is. And that it would fall to there. Holy snap! The king of whatever said it's not a counter trend. Well, in this time frame, it is. Thank you, everyone, for answering. Thank you. I appreciate it. I really do. Yeah, there seems to be a huge delay today. But notice the accuracy, even though we were talking about like things 12 hours in advance. So like 12 hours in advance, we talked about this being the resistance and where a counter trend would develop. Then I said, if you were going to buy it back again, that's where you should buy it. If you recall that, you can go back and watch the video, right? I think 4,000 people have watched it, so it's not a secret. And that a true counter trend needs a reversal pattern. How about a double top, right? And that if that produced, the target is here. Now check out the accuracy on all of these as far as the first touch top, the actual double top, and the actual hit of the target. We're talking about 1 or 2 pips accuracy 12 hours in advance, 3 days in advance, right? 6 days in advance. Holy crap moly. Maybe SL. Okay, cool, right? Again, and that was in front of thousands of people after non-farm payrolls. Cool, right? Okay, this is not a lesson of, ha, 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 I'm right. It's more like, did you write it down? How are you going to remember this? What were the pieces involved? Did you take notes? Do you have questions? All these things. I would also ask myself, like, how do the weekly pivots before and after fit themselves into the monthly pivots? How do they, right? So like, here's the beginning of the up move. There's the target. Here's the front run for the second target. Then the double top at exact price you would expect it. So in that case, what were the components that went into this? Some of the components is the early move, right? And then you, in that particular situation, you would expect a double top, which it did happen, and you'd expect it at that price, which it did happen, and the target is there. It's more like, so first of all, why would that be so? I mean, you can take the training course and say, okay, I wrote all that down, Wayne taught me, now I know. But I always ask, like, why? Why does that happen? And then once you have sort of a theory on the why, it helps you understand how the trades come together. And then how did those follow-up trades come together? Okay. And then if I were to add one more, right? If I were to add one more, I'd say, how does the Fed meeting fit into this? And what was the market like before going into the Fed meeting? So I got to back out even farther here. Okay. Now I'm challenging you now to ask some pretty big questions. Okay. So here's 2018. The dollar got strong. Why? They were raising interest rates. Cool. Then what? Now we're not so sure about raising interest rates. Okay. Now we're thinking they might cut. So what happened since, or let's say between Fed meetings? Let's zoom in a little bit. What happened between Fed meetings? So this was down for a year, right? And then sort of an up and down for 6 months. And now the last month before going into the Fed meeting. So where was the last Fed meeting? June. Sort of in here, right? So how'd this play out? Here's the Fed meeting. First of all, is the Fed meeting important? Okay. Can you explain? Of course I can, Jason. You need to do the research or take the training course. Okay. You don't need to pay money. You can do all your research yourself. I'm pushing you in the right direction. Now you know what you need to know. Okay. And then lastly, how many people remember when I said, I don't know why, and it might be wrong, but I pictured June as an up and a down. And I said, I don't really know why I think of it that way, and I don't really have any analysis or data to prove it. I'm probably wrong. However, that's how I envision June. And then I don't know what will happen after the Fed meeting because I don't know what the Fed meeting is. And then once it does happen, we'll probably have a week maybe of some volatility, and then it'll probably get really quiet. How many people remember that? So in this case, maybe it'll look like this and then like this. And of course, now we have this June. This is an M2. This is a buy. Prefaced with a double bottom. Great. And then there's the target. And the reason I think this happens, to kind of answer what burning in Jason's mind, is those that wanted to buy bought it, and then they took profit. They got out. Those that needed to sell sold it, and now they got out. So the way I look at this, and again, it might be wrong, but this is just simply people exiting. Because it's risk to their portfolio going into summer. So anyone that needed to get out here, got out here. Anyone that needed to get out there, got out there. And then this is the risk event. So now some people are like, aha, we got to get back in. And then other people are going to say, aha, we got to get back out. And it's the second wave of adjusting portfolios. No, Jason, but if you go to live.fxbootcamp.com, you can get a coach to work with you one-on-one. Maybe you could do stuff like that with you during your meetings with them. Okay. I'm not going to have time. I'm going to be studying 20 hours a day at Harvard for a month. So unfortunately, I can't help you. Sure know what I'm talking about? Cool. Even if you paid me an hourly rate, I don't even have the time. So anyway, so now I think new positions are going to happen based on new ideas. And then we will still likely lose volume and volatility. Now here's one thought. And I'm going to put this for you to think about because it may affect your bias. If you believe the Fed's going to cut interest rates, now apparently some people think it's going to be July. I have serious doubts about that. So then there's what? There's one in September, there's another one in late October, and then there's another one in December, right? Fed meetings. So I don't think that's true. So maybe 7. And then maybe another one in Dece. There's your 50 basis points. I have a hard time believing that the Fed will cut 50 all at once. So they're going to string it up. Okay? If that's your opinion or some version of that, then let me ask you a follow-on question. Will they cut in 2020? Like, is this a trend? Maybe every other meeting. So that means there's one in Mar, isn't there? And then another, and then next June. Okay. So now we're talking, that's a whole 1%. So maybe that's too much. But anyways, do you believe that they'll do these two cuts and maybe at least one more in 2020? Is that your belief? Like, could you sit down with a potential client and say, hey, here's what I think over the next 6 to 12 months. The Fed's going to cut, they're going to cut, they're going to cut. And they might even cut again. So that's a reasonable point of view. I don't know if it's right, but that's one of the potential point of views you might have. If you had that point of view, what would the reaction be? The reaction would be dollar weakness for the next 12 months. Meaning, and this is a big challenge for you guys, do you have the capacity to maybe buy something? I wouldn't do it up here, but next week, next month, during the summer doldrums, could you buy something, let's say in this area, and hold it for 12 months? Or at least till the end of the year? At least. But if you think there's going to be a cut in 2020, the market's going to therefore think there's going to be a cut in 2020, and it's going to stay most likely more weak than strong. This is how trading works, guys. So lots of people now are posting their opinions. Great. I'm not reading them, and I don't care. I'm not doing that to be mean. All I'm saying is you need to make a decision because you don't know any more than I know. You can read all the transcripts or you can just listen to CNBC. Whatever. Get your information, whatever you want, process the information any way you need, and then you come up with a decision. Okay? Yeah, Chuck says it's a lousy carry, but it's not necessarily a carry. So the other way to do it is, every single day, I don't know if you want to do euro dollar, but you buy dips and you buy dips and you buy dips, and maybe every swing trade is dollar short, and weekly and monthly and all that kind of stuff, but you translate it into a trade. Okay? So don't confuse a position trade with a carry trade. Now, your cost basis for euro dollar long might be horrible. So you would day trade it long. So make sure you double check all that stuff. Okay? So another way of doing it, and this is interesting, so thank you for bringing it up, y'all. Maybe there's a better thing to be carrying. So if you were long, let's say for an entire year, you would lose a lot. Okay, you'd lose a lot in carry. Okay, so you don't really want to be long that one. I don't know if you want to buy pound either. What if you were short this one? Let's take a look. And if you're long, what? Hang on. Swap long. Okay. Swap short. A little better. So you want to be short on this one. Swap long, swap short. Look at this. Half the loss. Okay. Okay. Interesting, right? How about this? This would be a long trade. Let's take a look. Swap long. 1.8, half again. So 13 versus 2. So you're like, well, I could probably chew on that. So maybe an Aussie dollar long? Maybe? Looks like Aussie dollar long is the least expensive. Followed by Kiwi. I don't know how you feel about that, but there you go. Okay. Yeah, so what about emerging market currencies? Yeah, that's a great one. So, you know what, let me just do it the same way. So I talked about this just, at the beginning of the webinar. I said the other benefit here is it usually helps emerging markets. Why does it help emerging markets, guys? Well, I look up Turkish lira and rand. Why, and peso? Why would that impact emerging markets? Why would falling interest rates in the United States positively impact an emerging market? Because emerging markets have borrowed money, and specifically borrowed dollars. So if the dollar gets cheaper, their loans get more affordable. Their loans get cheaper because they have to pay back their loans in US dollars. So if the value of the dollar is falling, it's like someone else is paying part of their, loan for them. It just gets cheaper. So like imagine it was just gold coins. And it's like your loan went from 20 gold coins to 19 gold coins, so to speak. I don't know, whatever. Rocks. Maybe gold wasn't even right. But whatever. Okay. All right, so let's take a look. If you are short dollar versus the lira now, you will earn 1,500% a year. Holy! If you're short USD Mexican peso, you will make 900% a year. Yeah, I know, it sucks, right? If you are short, where's my czar? If you're short South African rand, you'll earn 570% a year. Earn. So what does that mean? USD ZAR is the least favorable. For every $100 you invest of your actual cash, remember you're leveraged, I'm assuming 100 to 1. Okay, so you open an account at Trader's Way, you just use 100 to 1, don't go all creepy on me and do more than that. If you short this pair, then you've only risked 100 of your actual cash, 100 bucks. Okay? Over the course of holding this USD ZAR short, you will earn almost $600 in interest payments, just in interest payments. But you only have $100 that you've used as collateral. So you've earned $600 in interest payments, but you only have $100 risked, 600%. That's how I come up with that. It's actually 570%. But a 570%, it's basically a bond. I was explaining this the other day. I think of it as a bond, like I'm issuing a bond. I'm loaning South Africa money, and I'm charging them 570% a year. Now, over the course of that year, maybe, just maybe, the South African rand appreciates in value. Well, they're paying me back in rand. They're paying me interest payments in dollars, but I'm going to earn, they're going to pay me back in cash, right, in rand. And if the rand might go up, which means my rand is more value, the purchasing power parity has changed in my favor. So now 1 rand will buy more, which means we'll buy more dollars, which means now I have more dollars, plus I collected the 570%. Holy smokes, eh? Alpha shout! And remember, ZAR sucks compared to Lira, which will pay you 1,500%. So for every $100 in cash you used as collateral, you'll earn $1,500 in interest payments per year, plus any appreciation in the Turkish lira. Okay? Now, check it out. Go through Traders Way competitors. Go find another broker, check out their demo account, go through what I just did, and they'll probably screw you over on the swap. You won't even earn money, you'll lose money. Traders Way might pay you 1,500% on your collateral, and on another broker, you'll lose money. Ha! So you might as well stay with Traders Way. Okay? So yeah, Ali says make sure they pay you the interest. Right. This is what Traders Way pays you. Okay? So you can open a demo account, check it out. You can go through any one of these currency pairs and check out the long and the short. Okay? You want, if you're long term, I don't even want to pick here. Aussie Swiss franc. Okay? If you hold this long for a year, you'll earn a couple 100%. Great, nice, cool. If you're short, you'll lose your shirt. So, you can do this over and over and over again. If you compare to other brokers, and maybe you just trust me on this, and someone else just yesterday or the day before said they went through and they did this, and you find out you get screwed by other brokers. And that Traders Way is very, very generous. Check this out, ready? Euro Turkish lira short. 1,800% a year. Ho! Ho! Now, Ali says, that's great if it's true. Well, that's it. It's right there, dude. It's right there. You can get your swap rates. And if you're with a different broker now, just do it right now. Just go find out. Pick any pair you want. Check out the swap rate. I'd guess 9 times out of 10, Traders Way will easily beat it. Okay? Mark says he's not even earning a swap. Well, there you go. Okay? 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 So there you go. Keep it in mind. So what are you going to do now as a currency trader? Oh, by the way, am I supposed to tell you, oh, we're in a third wave, and or are we supposed to be talking about these big things? Who the heck is Tom? Are you pitching somebody else? My daily fisher? So anyways, I'm trying to get you thinking big, like the Fed hinted at maybe changing policy. Okay? Someone hinted at the Fed may be changing policy. How do you behave as an institutional investor? Now, I said what to do yesterday. If there's a hint, sell the dollar. If there's not a hint, buy the dollar. So now 24 hours has gone by. Here we are. What has your analysis been on your own? How did you think about this possible change? Okay. Well, if that's true, they don't have me. Right, Maxine? If that's true, they don't have me. So you guys should switch over. Okay. Cool. So there's that USD Swiss franc. That's the euro dollar. Okay. This is, you're going to lose money on the long-term swap on this. Remember, that's not Trader's Way. That's the interbanking system. Okay. But it's the least costly is the way I look at it. If you wanted to be long a major, a G20 currency, because, you know, look, trading an exotic currency is a bit dangerous. You know what I mean? And you probably don't know anything about these economies and stuff, so be careful. So let's say you say, let's say in your business plan, it says you only trade G20, maybe even G10, okay? Which is probably the smartest thing ever. Great. Then you say, well, based on that information, you want to be short dollar long term for the next 6 months, maybe for a year. Oh, thank you guys for everyone said that they're switching over to Trader's Way. Right on. Thank you. This is the least costly, so you could do that one. Now, to avoid the swap, in this case, the negative swap, all you have to do is close your trade at 4:59 New York time. Okay? And then at 5:01, buy it back. So you could actually do that, or you could just day trade it. So learn how to take the swing trading course. The swing trading course will take you through monthly swinging and weekly swinging, and you can, and I'll probably put a course together for this in the fall, day trading it. So you'll end up day trading your way long for the next year on like all dollar pairs, and by day trading, you're going to avoid the negative swap, but pick up all the pips. Okay. Yeah, it looks like a lot of you guys have switched to Trader's Way. Thank you for your loyalty and the respect. That's really cool. I really do appreciate that. Thank you. Well, I don't own Trader's Way, Ali, but yes, you get paid every day at 5 p.m. It's called rollover. Okay? Now, the interesting thing about Forex, it's actually T+2, which is sort of a weird banking phenomenon, but you actually get paid for something that happened 2 days ago. So the interesting thing is on Wednesday, you get paid for 3 days worth of interest payments. Okay? Because they're paying you for Saturday and Sunday. So on a Wednesday, okay, at 4:59, if you sold, let's say, the Turkish lira yen, okay, or not Turkish lira, Euro Turkish lira, which pays a huge swap if you're short. Well, on Wednesday, even if you've only owned it for 1 minute, you'll get paid for 3 full days. Now, if Monday is a banking holiday and you do that on Thursday, you get paid for 4 days of interest payments, even if you only held it for 1 minute. Okay. Yeah. Bull's power just fell out of his chair. Say what? So I tell a story where someone I knew, he made, I can't remember what it was. It was like $30,000 or $40,000 in 1 minute on a rollover like that. And I yelled at him for being stupid. Well, Jimbo says the 30 pips on the spread. Not if you're in it on the long term. So typically, like when you look at rollover, a spread can widen, right? Mostly because the market is quiet. Or in Asia, the spread can be fairly high as well. That's not a function of your broker. That's a function of the interbanking system. If nobody's trading, the spreads are higher. Think of this, like what is a spread? You want to buy something, so you need to find someone to sell. So you're like, I want to pay a certain price. You want to buy it. You want to buy it and like, here's my price. But nobody wants to sell it to you at that price, or not even a little bit higher, but the next seller is like way up here. So you're going to have to reach up and pay them what they want. That's the closest seller if you're a buyer. That's what the spread is. If you're a buyer, where's the closest seller? So when you're trading, when the markets are quiet and everyone's asleep, you're like, man, I want to buy some Hungarian francs or something. I want to buy some Polish zloty. And everybody in Poland is asleep. You got to like find somebody on the planet that has some Polish zloty and is trying to sell it right now. Well, you might have to, call a friend, like you just have to, there's going to be a wider spread. But if you're in the middle of the Polish trading day and all the Polish banks are open and they're trying to actually get rid of their zloty, hey, not a problem. The spread's going to be close. In fact, you'll make an offer like, hey, man, I want to buy it at this price. You'll probably have Polish bankers just tripping all over to get you at your price, and the spread's really close. So someone noted, I think it was Jimbo, that the spread can be higher. It's, well, true in certain times of day, but then in other times of the day, you'll see the spread on some of these exotics are actually quite great. And of course, now I come from an old school where even the pound yen was 12 pips at one point, right? So now it's fairly cheap. But the one way to keep an eye on the spread, guys, is to do it this way. I think you do it here and here. Show ask line. So now you got the bid and the ask. Look at the spread. Oh, it's too much. Look at that spread. You're like, well, actually, that spread's not very wide at all. Look how narrow the spread is. You're like, oh, look at that spread. Forget it. I can't trade this. Look at that spread. So what I'm looking at, guys, is the distance between the red line and the blue line. Now, if you're trading in an exotic, which naturally has a wider spread because there's less Turkish lira in the world, right? So therefore, they're typically wider spreads, less volume and all that kind of stuff, and more volatility. All these things typically widen a spread. But during the heat of the trading day, like right now, that spread is hardly anything. If you were here in the between the New York close and the Asian Open, and like nobody on the planet is trading anything, well, euro dollar probably widens to 3 pips, and this sucker widens to whatever pips. But It's because there's no Turkish lira available. Okay. No, I don't trade ECN accounts. No, Mark. Okay, I should be clear too, since I've never. Well, I have one somewhere, but I don't trade an ECN account, so I don't know like the swaps on that, or if there are swaps, or if it's different. This is a variable spread. I've been trading variable spreads since day one. I don't like fixed spreads unless I'm scalping, and I tend to not scalp as much anymore. I used to scalp like 25 to 30 times a day. I don't do that anymore. Okay, I'm too pretty to work that hard. So I'm more interested in lower spreads and bigger swaps. So I get that through variable spreads. Now, some people say, I just hate playing a spread, so I'll pay, I want an ECN account. Well, what you're doing is paying a commission instead of a spread. So I don't get the difference, right? But if you're happier with ECN, that's great. But full disclosure, I don't know if that affects swaps or not. I really don't. So you might pay a commission and not a spread, but find out maybe because of the mechanics of how ECNs work, which I'm not familiar with, there might not be a swap, or maybe it's more. I mean, honestly, I just don't know. That's all I'm saying. Okay. Monday market open spreads can be out. Yes, once again, because nobody's trading it, right? So like when I implore, like every week, I beg you guys, please be at your charts Sunday afternoon, 5 p.m. New York time. The market's going to open and you need to get in your trades. What percentage of people listen to me and take my advice? What percentage? A half of 1%, maybe? Right? Out of 1,500 people that watch the video, maybe 7 take my advice. So what does that show you? What is that indicative of? It's indicative of a thin market. So you probably be just fine on most of the majors. But yeah, you probably don't want to be trading an exotic, right? Right? So that's why on my exotics, I'll have the bid-ask spread set up for you guys, or for me. Okay, so there's the tip of the day. When trading exotics, only do it during major time frames, and then put the bid-ask spread so you can actually see the spread. Honestly, does that spread on a 1-minute chart, does that spread look too wide for you to possibly consider trading this? I'm looking at the distance between the red line and the blue line. It looks like half of a 1-minute candle. That's too much to trade this? Really? See what I mean? Okay. Okay. But if you trade this, let's say 9 hours from now, the spread will be significantly, it'll be way up here. Okay. It'll be 10 times greater. But you have to realize you're the only dum-dum on the entire planet trading. So that's your fault. Okay. So Ali says that's 18 pips. Well, first of all, what is that worth money-wise? And it might be worth hardly anything because you're talking about lira. And also, let's say it's 18 pips, but it moves, I'll just throw out a number, 180 pips a day. Okay? And you compare that to, let's say, euro dollar. Let's say you pay 2 pips on a euro dollar, and it moves 75 pips. Okay. You see what I mean? On a relative basis, not an absolute. So you guys get all caught up like absolute. Like, it's 18 pips. Yeah, but it's only worth $2. Yeah, but they're pips. No. What is it relative to money? So like another one is USD Mexican peso. People will run away from that. Oh my God, it's 13 pips. Yeah, but it's only worth about 4 euro dollar pips. Right? It's not that big of a deal. If you're trying to make 100 pips and it's going to cost you 4 to get in, and you're normally used to paying 2 to get into a 100 pip trade, like really, you will throw away a 100 pip opportunity because it will cost you an extra 2 pips. Well, that's double the spread on my euro dollar. Like, oh, come on, bro. Seriously? Right? Penny wise and pound foolish kind of stuff. Like, think of everything relative. The whole thing about FX is it's always relative. It's not like you're taking your money and buying Apple stock. Okay? You're always comparing two things, your dollar versus whatever. Right? 18 pips to get in 180 pip move versus 2 pips to get in a 75 pip move. There's a 10-to-1 ratio, right? Whoa, this might actually be the better trade, pip per pip. So I'm just always trying to feed your mind, guys, to look at things different points of view. What is the actual relative cost, not the absolute? 2 and 18 doesn't mean this is 9 times more expensive. It's not true, right? So one way to practice this, and this is what I used to do for people that had this comment, because I spent a lot of time teaching people how to trade the Mexican peso, right? So I said, do this on a demo account. Take out a trade, right? Sell sell USD Mexican peso for a mini lot, and then sell euro dollar for a mini lot, and compare how much money the trade actually cost you. And you might find that the euro dollar cost you 20 cents, right? And the USD Mexican peso cost you 35 cents. And I'm like, all right, so is that really cost prohibitive? Like, you're just like, there's no way I could trade Mexican peso because of the spread difference. I'm like, dude, now the difference is this is 2 pips and this might be, I'll say 13 pips. But relative to dollars, it's the same as 3.5 pips in dollar terms. This would be in peso terms, right? So you're like, oh, well, yeah, it's more, but I can live with that if the opportunity is right. That's all I'm saying, is make sure you're analyzing the opportunities properly. You can't just say 13 pips, I'm out. There's no way I could possibly live with myself if I traded that. It might not be the right answer. So Mexican peso, for example, we were talking about swaps. So you'd want to be short this. And yeah, look at that, 10%. Times 10-to-1 leverage, 100%. On 100-to-1 leverage, 1,000% a year to be short that. See? So I'm just challenging your mind. That's all. I'm just challenging you to think outside the box, to think bigger than a retail amateur trader. You might be a retail amateur trader, but I'm trying to get you to greatness. I want you to think like an institutional professional trader. Okay? So yeah, if the Fed does cut interest rates later this year and the market expects them to continue to raise interest rates into the future, you might actually be short dollar for 6 months maybe 12 months. Okay? If that is true, and if you believe it's true, or you think the market believes it's true, what is your, that's why I can't, I'm drawing onto the Y-O, I'm going to go back, your strategy. This is my challenge to you, my friend. Yeah. Okay? You say you want to act or be a professional trader one day. What is your outlook for the next 6 to 12 months for the US dollar? And how are you going to make money trading it? You should be able to put together a 3 or 4 slide PowerPoint presentation deck that you would give to a potential client who might be interested in investing with you. Now think of it this way. How many global international businesses have exposure to the US dollar, and what percentage of them would be interested in having someone hedge their foreign exchange risk? Okay? Well, the only business that's not exposed to international customers would be like, I don't know, a maid, a gardener. You know what I mean? So here's what I think. I'm going to throw this out here. Alex says Draghi's going to job on. Okay, great. Well, they already started that. Here's what I think. I think this is another game theory signal like Draghi gave to save Greece. I have to read, and I said this at the beginning, so I'll wrap up with this. I have not read word for word the transcript. So what would a professional institutional trader do? Read Wall Street Journal and get an opinion? Watch CNBC and get an opinion? Or read the damn transcript and make an opinion? Okay? So that's one message. Second of all, having not read the transcript yet, but going based on my old bias, which may be flawed, we don't know. But I don't think they're going to cut. I think they're just telling the market they're thinking about maybe cutting, which is not a commitment. And they're going to get the market to do what they're going to do and then not do anything. So again, I don't know what he said yesterday. I'm busy getting ready to move, right? But I have a stinking feeling that they're hyping the market to get the response they want because everyone's going to front run them. So the Fed's like, this is really cool. I can do the wink, wink, nudge, nudge thing, just even a little bit, and the stock market's going to rally. The dollar's going to weaken. Commodities are going to rally. We'll get inflation. And then we'll come back and say, well, I told you we were data dependent, and now we have a stock market rally, right? And the jobs market's still hot, and commodities like oil and gold are up, and the dollar's down, and trade is going good, and we have signs of inflation. Because why? Oil creates inflation, and a weak dollar creates inflation. Asset prices going up like the stock market creates inflation. So all of a sudden they're like, hey, we have a bunch of inflation. Sorry, we were thinking about cutting interest rates, but now we can't cut interest rates. That's what my hunch is telling me, my spidey sense. Okay? That's what I think. But I'm wicked smart. But if I read the transcript, it might not actually be true. So I got to be careful. All I'm saying is you got to think ahead. And not only do you have to plan your strategy is worthless unless you've figured out your enemy's strategy. If you've read The Art of War about how to be an honorable general, okay, is you start by looking at your enemy. And the art of war, by the way, is fabulous. It'll say, like, if you have your enemy, even if you're a superior army, but you've trapped your enemy between your troops and a swamp, let them go. If your army, even if a superior army, is standing between your enemy and their home, they're trying to get home to save their wife and children. You have a superior army. What do? You get out of the way, because they will fight to the death to get home to save their wife and children. And they'll kill 10 to 1. So the dishonorable thing would be fight them. You're gonna have an expensive battle. That's not honorable. So you just let them pass. Fight them another day. Your superior army, don't worry about it. Diplomacy might be the right thing in that situation, right? So you're gonna have to, before you even create your strategy, you got to think about the other strategies. What if everybody is wrong? Well, here's the thing, guys. Almost everybody is stupid, including everyone trading. The market is an aggregate of humanity, and most people are not patient, they're not disciplined, they're not that smart, they're not planning ahead, they're being selfish and greedy, and you are a shining light in a world of darkness. And you can see all these flaws, and you can say, well, yeah, they're not reading the transcript. They're making up strategies on the fly without a long-term bias based on something they read in the Wall Street Journal or what Kramer is saying on CNBC. And then they walk into the trade tomorrow and they're going to trade this week's news and they're whatever, and they're going to react and they're going to throw money down on all of this. Meanwhile, you're patient and disciplined, you do your own work, and you'll take advantage of all that weakness, and this is how you make money. You're not contrarian, you just have better analysis, and you're patient and disciplined to carry out your trading. You see what I mean? Four-dimensional chess move, maybe. So, yeah, okay, dollar's going to weaken for a while. That's great, and you should take advantage of that. And then where are the next periods where things might change? What if the Fed does signal that they're not going to raise interest rates? Well, I think they're probably going to raise, I think they're probably going to ride that gravy train, hopefully through September is what they're thinking. Then they'll give the wink, wink. No. It's going to be December. Okay? But whatever. So my message to you is this. Read the transcript. Read it thoroughly. Don't have an opinion going in. Read it, take notes, write things down. And then I have a summary. According to the written transcript, the Federal Reserve will do blah, blah, blah. Great. If you feel like they're going to cut, dollar weakens. If you feel like they're not going to cut, well, when the rest of the world figures out they're not going to cut, the dollar will strengthen. Great. So how will you now act? Put it together in a bias, follow up the bias with technical trade plans, and then have the patience and discipline to buy dips at support. And then your next thing is, if you want to be short dollar for the next 6 to 12 months, how are you going to deal with the negative swap? Are you going to trade G20 currencies daily? Right, day trade the G10 or G20 currencies, I guess G10 currencies, or are you also going to create an exotic portfolio? Okay, see what I mean? And if you do that, then you are wicked smart too. So thank you for being on my team. Thank you for being awesome. Thank you for the hard work you put into all of this. There's 4,000 other videos on YouTube. Be my guest to watch them all, and I will see you tomorrow. Tomorrow will be my last day with you guys, and then I'm moving to Cambridge to get wicked smarter. So take care of yourself. Open account to trade.